All right, hello. So I don't expect anyone to tune in because it is Saturday, but I'm still gonna stream just because I have nothing else to do. Hold on. No, that's not what I want to do. All right. All right. So it's today's price action, and this is coming from. Okay. Let's go back. So what I've been doing is I've been looking at the price action in the past and comparing it to today's not today, but I guess the earlier in the year, and I've been trying to just figure out or refine my model because I kind of am changing the sort of mindset I am using as a trader when I'm approaching, my trades, and I'll explain a little bit more what I mean. All right, so hold on. Anyway, let me pull up my 2025 model. I have it somewhere. So this is the trading plan. Now this is stuff that I need to add to it. Well, I think I did. I added midnight 100 point. Add that. So the things I'm considering here, adding to the trading plan. This is something I'll be doing forward testing. But if the 3 a.m. candle is making the high of the day, the average range throughout the entire year for the 3 o'clock hour in London is 60 points. So if it's more than that, then it's likely that it's doing high and low, maybe high or low of the day, and so there's less, maybe there's going to be less trading later in the day. Same thing with the pre-market, okay, where you have a choppy opening. But really, this is just for testing. I'm going to see, if I were to apply this, would I be trading today? And then we'll trade. We'll see what results we get. And these are things I'm going to be writing down, keeping track of in my journal, outside from public eyes. All this in 2025 will be very private. And I think what I want to be doing is, my friend suggested, is that I go on a trade by, or a group of trades basis. So I'm doing 30 trades, is what he suggested. So I'm going to trade 30 different trades. Doesn't matter how long it takes. Then I'm going to look at all those trades and I'm going to say, okay, what can I change? I think instead I might just do 20 because I want to try and do it, every 3 months. And I think 30 trades in 3 months is a lot, but 20 trades could be doable in 3 months. So I don't know. We'll see. But yeah, I'd like to just kind of do that where after 30 or 20 trades or a number of trades, at least 20, I look back on what I did, and I look back at what I can tweak and change and what I could add, and then I continue going forward. But the big thing I changed about my model is basically the same as I've been doing in 2024. Not my model, but my training plan. Like the model is the same, it's just the training plan is different. So I've added a lot more things to make it where I'm approaching the markets much more in a probabilistic sense instead of okay, I know where price is going to go, I'm going to take a trade. Right? Because before, the execution process was similar. All it really consisted of, my model before, was I had to see, I had to wait till 9:30 open. And I had to see, or sometimes actually in a year, there wasn't really a rule that said I had to do 9:30 open, but at the beginning of the year, I was trading, pre-market or London or whatever. Let's say we see price go down, we see it come down to a liquidity level like right here. Then I would need to see it go up a little bit and go down, create a breaker setup, and then, long. So that was basically going for a breaker setup. And it was on any time frame, really. It just had to be there. And so there was lots of opportunity to, trade all the time. I had trade opportunities every day. Until markets started to get, pretty shit. But not all in the same sessions, but in the day there was usually always one session that had my trade. Also, I don't know why it's not letting me. It should be on the main first of all, right? No, 2024. All right, sorry. So that's where I have all my drawings, right? No. Oh, no, my bad. Oops. Wait, I can't even. Okay, never mind. No, I know why it's not. Okay, no, go back to 2024. Sorry, I need to change that to MNQM 2024 because that's where I did my trading, not NQM. There you go. It's a little better. There should be more drawings now. annotations. Yeah, okay, good. All right, so nice. Yeah, so basically going into the year, I did a lot of changing things, tweaking things because as price got harder to trade as we're getting closer to elections, and there's also a lot more stuff going on around the world. In terms of wars and risks, prices started to get very sticky, and I started to lose a lot of opportunities, and I started to change the way I did things. And it caught it. I did get some payouts, but it was never consistent. I think what really happened is that I can go more in depth on this. I made a presentation. I'll be recording it. I was either going to record or stream today, but chose to stream. Basically, it's a presentation about following my rules where I go pretty in depth on exactly what it means to follow your rules and how to do it. And I talk about personal experiences, but from just kind of looking back at the first few months, I see there was a major difference in how I was journaling and how I was, behaving compared towards the end, where after the payouts, of course, I get excited. I already talked about this many times, but when I got a payout, I get excited, and all of a sudden, it feels like I'm winning and I'm here, and I'd encounter a loss, and then the loss would just take everything away. All the good that I experienced, it's like it was gone, and I was now back to where I was, and it just caused me to act a little irrationally sometimes. And I did, blow some accounts that I had. Actually, all the accounts I got a payout on, I ended up blowing them last year, which is only two of them. So whatever. And it was always, within two. Well, the first one was within 2 weeks of a payout, and the second one was within 2 months of a payout. So a month to a month and a half. So I have to say that I'm changing the way I approach trading. Now, the way I'm approaching it now is I'm completely submitting myself to the market and its random nature. I'm no longer trying to predict everything. So before you see that I was doing a lot of like 60-day look backs, 1 hour look backs. I wanted to try and like predict everything. I wanted to be like, okay, well, this is MNQH. Now let's go to my back test. We gotta add MNQM2024. MNQM. Oh, oops. There you go. So, yeah, I was always, let's say, like, I'm looking at the hourly chart and I see a market structure shift. Basically, I'm trying to look at a 72-hour look back, and I'm trying to predict that it's going to go down there, and I'm drawing arrows and all that stuff. And it's helping me to get more certainty in my trading, right? Like if I look at this price action here, I'd start to consider, okay, where can I get into a trade? Well, after we've taken out, this short-term low and we're in a discount, I look for places to buy. See, like here, it's like I know that this is a buy in my head. Like I know that here, so it's hard to accept losses in this scenario where like I'm so confident about this short-term low, this being a run on sell side and being something that once we balance and we close above it, we shouldn't really come back into. Like this very algorithmic way of thinking and trading. I can start to look at, okay, well, this is all the PD arrays I can use to enter the trade. In the 15-minute, I would look for an order block. That's the whole order block within a balanced price range. It's a really good buying opportunity right there. And price just completely delivers throughout the afternoon higher. You see, like, and it didn't really matter, like, the time. It's just that if I can see price go into a certain area and move a certain way, then I want to trade because I was thinking with an algorithmic approach where, okay, this is what price is going to do because that's what the algorithm is going to do. But now in 2025, I want to approach the charts with a much more probabilistic mindset where I'm not looking at everything. I'm not trying to do, I forgot what this is. Projections. I'm not trying to trade London. I'm not trying to do. Um, I'm not really trying to predict exactly where price is going and when on the higher time frame. And I still want a bias, but the way I get my bias is very simple, and I would really want to dumb things down, right? Because it's hard, like I said, to accept losses when you put so much work and effort into analyzing something and believing it's going to work. And while like it is, I believe it technically would be possible for someone to have a very good win rate trading, like discretionary, where okay, I think this will go here, so I'm going to buy it. I think it's possible. It's just extremely hard, and probably I think that you're not really built to think that way. And I mean, I certainly am not. Also, I need to remove the banner. Sorry for that. So what I mean is that when you approach your trading, obviously the human brain is when it looks at uncertainty, it that's like a threat, and you try and you start to have emotion, and emotion produces action, right? But if instead you look at something that's completely random, you start to kind of, if you really think about it, you start to kind of think about how there's no point of really stressing about it if it's random. And if you just have a set of rules, a model that more often than not, maybe not more often than not, but the way the money you can make when it works versus money you lose when it doesn't work, if it's set up in a way where you have good risk management or a good win rate, then you will, well, in reality, just good risk management, um, then you will make money. And so, like, just focusing on that is what's, in my opinion, more important going forward this year, um, than trying to always have a 90% win rate, always be on the right side of the market, and analyzing everything the market's doing. So let's get into kind of like what the approach is, what the 2025 model is. So first thing is obviously schedule. I outline schedule, and I think that's important because as a trader, it's like a job, it's like work, and I need to have a schedule. Uh, you know, things that I regularly do. So Sunday is a plan the week, and this is just a market analysis. I look at the news, and I plan which days I'm going to trade. I outline my study schedule. This is just for school. So I kind of like build my week and be like, hey, I'm going to trade at these times. I'm going to study at these times. I have these appointments. And it's just like just regular things. Like I'm keeping my life organized. I know what I'm doing when. And I this was last year I was doing market reviews. This year I will not always be doing market reviews. My presence on social media and YouTube, well, already social media is minimal, but my presence on YouTube will be minimized just because I want to really focus on gathering data, approaching trading in this probabilistic randomness sort of mindset instead of an algorithmic approach where I'm just always trying to predict where price is going to go at what time. But very simply, Monday to Friday, 9:30 to 11:30, I trade. Journal my thoughts. So I'm doing this on a piece of paper. Got this black box, my grandfather's house, and you got like nice little books. So I'm gonna be every day like a diary and work record, and there's like different things I can write in it. So these little books, I'm gonna be writing my thoughts and just appointments, stuff I need to do that day, so that when I look back on it, I kind of know what was going on that day, what I was thinking. I'm operating my office because I do want to record my trades and kind of like analyze the way I'm reacting physically, what I'm saying, my breathing to the trades, right? And then Saturday is just kind of like make sure I logged everything, because obviously if I'm going forward and I'm doing this like gathering data for this model, like I'm taking 20 trades, I need to obviously record them. So just make sure I do that every Saturday. But when do I trade? So I thought a lot about this, but I'm not trading on no news days if there's high impact news the next day. So if it's like on Monday, there's no news, and there's a Tuesday with no news, like I might still trade Tuesday, I might still trade Monday. It just depends. Like if there's CPI or an important PPI and there's lots of emphasis on whatever that news is, and this is also going to be determined by keeping up with what's going on in the economy, what's going on in the news. But obviously you need to have common sense and be like, well, there's probably won't be that much movement, and then we're probably gonna wait until the news. So I will elect not to trade, but it doesn't mean that there's a no news day that I can't trade. Some weeks have just one red news day and four non-news, like non-red news day, non-high impact news days. So doesn't mean I won't trade that week. But anyways, holidays obviously. After a large range day, I don't want to trade. I want to let it breathe, and it will continue just expanding. So no trades after a large range session. Now this is if I see a trend, it doesn't mean that I won't trade. I just mean like if I see a really abnormally large session, then I won't trade. Like a huge London session or a huge Asian session. Like at the time Trump got elected and it was an insanely large Asia session, for example. Buy under midnight open and sell above midnight open. So very simple. I look at midnight open, and this is a rule I had at the beginning of the year, and through time, last year in 2024, I let go of this rule because it was frustrating. There was a lot less trades coming up to the elections, and I just let go of the rule. Eventually, at one point, like halfway through the year, don't trade if 9 o'clock hour makes over 100 points already. And I want to say just the minute open. Like oftentimes we're above minute open, and I can see that it is buying opportunity. Like we're gonna like for example. I remember this day on the hourly chart, right? I could see after in the afternoon, once we closed above here and we had an order block, we had a balanced price range with this run on sell side. We had just gotten out of discount and we still had higher liquidity to hit. Like I could tell we would make another run higher, right? But if we're above midnight open, like if I'm trying to trade here at like a silver bullet in the 2 o'clock hour or whatever, if we're above midnight open, like even though I can see it go higher, it doesn't matter. I'm just not trading. It's part of the rules. See, like this is what I mean when I'm trying to move away from an algorithmic approach and I'm trying to just stick to a rule-based approach. I make rules. I don't care what the algorithm's doing, what I think it's going to do. The rules are more important. And see, this is something in 2024 I did not consider. I only considered what I thought the algorithm would do, not what my rules said. And anyways, don't trade if the 9 o'clock hour makes over 100 points range. And this is something one of my buddies shared in a Discord, but let me find it. So he shared a chart basically of here, new tab, we'll just do that. And this is really nice because this kind of shows you the in a day where the high and low of the day is made most of the time. So you can see that at 10 o'clock is where, and 9 o'clock is the majority of the time, and the last hour trading where the high and low of the day is made. There's a little bit at 2 and 3, and this is from the NASDAQ, by the way. It might be different for something else, but this is that for here, midnight, 1, 2, 3, 3 a.m. London, and 4 a.m. That's when the pre-market opens. Some of the pre-markets for the New York opens. And then you have ramping up volatility in the pre-market, dies down a little bit at lunch, afternoon it continues. So over here you see the total range, and at 9 o'clock you see average range is about 120 points. So if at any time ahead of 9:30 or ahead of 10 o'clock, I see that we're over 100 points, I just don't trade, and I just let it kind of be whatever. I'm not trading that day, right? This is also why I'm considering 3 a.m. If it's over 60 points total range, I'm considering not trading at 3 a.m. At all for the day. Like, because if those couple days, you see in the next picture, the percentage of time where 3 a.m. made the high low of the day, that's like 6% of the time. I'm not sure exactly how these percentages are represented, but obviously there's if we have a day where we have a 60-point range of 3 a.m., it's 60 points. It's likely that the rest of the day is probably going to be slower, and so I may elect not to trade. But that's something I will be doing forward testing. And then 10 o'clock, obviously that's like the big hour. the one I really want to be trading. And sometimes 11 o'clock, kind of the volatility comes off of 10 o'clock. So the reason why my trading stops at 11:30 here is just because of sometimes the 10:50 to 11:10 macro, and sometimes spill into the 11 o'clock hour. Not trying to trade lunch, because I find that lunch, if I'm trying to trade lunch and I'm trying to retrace on the morning stops, or just create a retracement into the morning distribution expansion, oftentimes I'm going, against wherever the midnight open is, and it just doesn't really line up with that rule. So I just looking for the 10 o'clock expansion really. Yeah, and then no trades before high impact news release on that day. So if there's FOMC minutes in the afternoon, whatever high impact news during that day, I have to wait until all the news is released, and then I can determine if I trade. Okay, so this is all just keep my workspace clean, water, record my trades, embrace uncertainty, losses and wins. Praise God. Execution process. First, I need to figure out a bias, and the way I do that is very simple. Again, I'm trying to dumb things down and very simplify everything so that it's just black and white. Like basically, I want to make it so a toddler could trade my model. So if let's say this is yesterday. All right, so if let's say yesterday I get into the market, and let me just remove everything so it's just easier on the eyes. All right, so 10 o'clock on Tuesday, sure, or 9:30. Yeah, let's say I get into this. Basically, I'm trying to figure out market maker buy model. Where are we more likely to drop to? So here I see that we've taken a high here, short-term high, right, and that's a stop run. Now we're in a premium, okay, because we've taken that liquidity. We still have higher liquidity here, and we're trading inside this very large range. So already I'm not really too excited about trading because we're trading inside this huge range, and it's better to wait until we hit one of these extremes. But we are in the premium of it, so we are also rejecting short-term highs. So to continue going lower is very possible. And I'm just trying to look at where liquidity is inside a market maker buy or sell model. And here I see that we're either in a bigger market maker buy model, with that high being the end of the market maker buy model. So if you're not familiar with what that is, that's just basically like this, right? Market maker buy model is just a big smiley. Market maker sell model is the opposite. Okay. But anyways, back to what I was saying. So we're either going to go long, this is on a higher time frame basis, or we are going to use the current day low or current week low. This is only Tuesday, and we're going to run down to that low and create a market maker sell model. Right. So I would go forward with that. So now once I see 9 o'clock, make that run down into the discount. Now I ask myself, okay, what did Asia do? This is Monday, sorry. Asia consolidated, London went higher, boys midnight opens here. So immediately I'm wired only look for buys. And where would I be buying? I need to find a dealing range to deliver into that's representing a market maker buy or sell model. So that would be from this high down to this low. I would be looking for a market maker buy model to complete. I wouldn't be looking for any market maker sell models. And we just kind of completed one, so we can maybe start a delivery higher, right? We don't have to necessarily go to that low, because all I need to know is that we are beneath midnight open and I'm looking for buys. The next thing I'm looking for is a 5-minute short-term low. And that's something we don't have here. We don't have the break of a 5-minute short-term low. We do, but the thing is that this is extremely far away. So if, let's say, price had came down, if price had done this and it came down like that, that's okay if there's more liquidity we're reaching for. But the thing is, because the liquidity I'm looking for is these relative equal highs up here, right? Because of that, it makes it hard for me to just buy on the break of a short-term low when it's that far away and it's already close to liquidity. I'm still trying to go with the idea that I'm trading a breaker setup. Like that's why I'm waiting for 5-minute short-term low. It doesn't have to be a breaker setup. Like I'm not going to look at 5-minute short-term low and I'm going to say, is that good quality or is that bad quality? Like no, that's not. There's no discretion. The trade is I need a 5-minute short-term low, and that's all it is. This is the 5-minute short-term low, so technically I can start to buy at 9:45 here. The problem is though that this is obviously very close to being the 9 o'clock hour, very close to being 100 points. So that's why I have that rule where if the 9 o'clock hour is at any time makes a range of over 100 points, I cannot trade. It's because if we have short-term lows that we trade through, I don't want to trade if we're displacing rapidly away from these lows and creating this much space. I don't want to be trading it. But so technically, let's just go forward and say, okay, well, this is actually part of my model. We have still hit a short-term low and sort of trended lower. And now we have, liquidity up here off of this trend lower. And so we can look for buys. I would then go to a 1-minute chart and I would look for the first 1-minute fair value gap. And that wouldn't obviously happen. Like we would have this distribution higher. I could buy out the order block. I could buy also the inverse fair value gap. It's another thing. So either the first 1-minute fair value gap, like it could be just a regular fair value gap like this one on the 10:02 candle, or it could be an inverse. But the thing is that I probably wouldn't get the opportunity to buy unless I buy the close of the candle here. Yeah, I wouldn't mind doing. I would be comfortable doing that because my stop that needs to be 20 points. So it would be outside of the fair value gap, and I would be like, okay. And I simply just aim for the first 5-minute short-term high. And, this would have been an annoying trade to sit in because it would have been like a 48-minute trade, but it would have been wielding 45 points. And I just need at least 1.5 RR. So the least I could go for is 30 points. I would do that if there was a breakaway gap here, but there isn't. So I would just simply go for either the rejection block or the high here. And seeing as that's probably, I think this is an hourly fair value gap, that red line, or some sort of daily something. Does it say? Yeah, hourly fair value gap. That would probably aim for the hourly fair value gap. So yeah, so basically that's just like a very easy approach to what I'm sort of trying to do. And let's keep going with the trading plan. So yeah, figuring out a bias is not that complicated. It's very simple. It just consists of, honestly, I should just remove this completely. This is unnecessary, really. Anyways, determine my premium and discount areas you will use to start looking for trades. And this is just, okay, basically what I did with the market maker summary is I look at, okay, where's price? Is it beneath or above minimum open? And, is there any liquidity it's reaching for? Did it just hit any liquidity? So this is maybe I could remove this with just minute open. Look for 9:30, 8:30 manipulation to occur following the break of a 5-minute short-term swing point. Trade that to be taken against manipulation. Wait for a fair value gap or inverse fair value gap. Take profit is at the first short-term swing point or breakaway gap, and stop is below up to 20 points. Doesn't matter where you buy, just that you're in line with risk parameters. Or you have 1.5 RR. Yeah, and I'll change this to just determine my room discount areas according determine whether you are a buyer or seller according to midnight open. All right, and then so there's I just completely removed the bias. I risk up to $40 every micro, $400 every contract. I risk $1,000 a close. Every $1,000 close profit allows me to add one more micro. This is if I was doing a live account. I'll be doing fun accounts with just one contract flat for the beginning of the year. I don't know about later. Aim for $200 of realized gains micro every month and stop there $2,000 per contract. So I'll also be doing this with the funded accounts. If I'm trading one contract in a funded account, I'm just aiming for $2,000 and I stop. It doesn't matter if I get in a week, I stop. And this is something I didn't do at all last year. I never had a goal. I mean, I guess, but it was a pretty high goal, like $3,000. Sometimes I reached it, and I don't know. I feel like I reached $2,000 many times last year of profit. Not many times, but it happened for the times I had the accounts. It did happen before, and I feel like if that's the most I've done in a month, other than when I got funded with, I did the whole profit target. But when I'm talking about actually trading funded accounts where I'm like the money I make is real and I can withdraw it. $2,000, a bit over that is the most I've gotten. So I feel like it's appropriate to stop at that, and that's where I want to have my target. 2 trades a day max. That's in case I take a loss, I allow myself to do one more. But after that, that's it. Break even or trail stop after 15 minutes. And this is a strict rule because, or break even or close after 15 minutes. And then next one is break even stop after price trades through newly created structure. I don't want the trail stop. I don't know if I should. Because it would mess up my RR. And I think maybe it's better to just go forward for the first 20 trades. Don't trail or stop. Just strictly leave it at break even. Oh hey, OD, I'm just going over my trading plan. By the way, yeah, we talked about this actually yesterday, me and you were asking me if I determine a bias on a daily chart and weekly chart, and because you had the impression I don't, and yes, like I actually completely removed the determining of a bias. So, anyways, break even or close after 15 minutes. Break even stop price trades. What? Break even stop after price trades through newly created structure. Make sure to be in a good mental state. You trade. Take no position is good practice. I should remove that one actually because it doesn't matter. If the rules say take a trade, I'll always take a trade, no matter what I think it's gonna lose or win. All right, so and in this one I will also I don't know if I'll remove or keep this one. Like this is if we're starting to really trend higher. Yeah, no, I'm gonna remove this one too because it just doesn't make sense. This was some of these things were from before, from 2024. All right, yeah. So like I showed an example of the using this day. So basically, if I enter into the day, I start on the hourly chart and ask myself, okay, where is the midnight open? Where's the liquidity levels? The liquidity here, there's liquidity up there. I don't necessarily need to see these liquidity levels getting hit, but I just want to have a good understanding of, okay, what has price been doing and where could we reach for? And then I go down and I look at the midnight open. So we have Asia session. No, this is Monday, sorry. Tuesday, Asia session. Oh yeah, no, this is Asia session. So we have midnight open right here. So very simply, the way I determine my bias is, are we beneath or above midnight open? That's all. This is so it leaves no room for any discretion. It's just very simply, are we above or underneath midnight open? And as you can see, going forward, the 9:30 open sends us underneath midnight open. So I'm only looking for bias. I don't need to be seeing any PD arrays or any sell side liquidities. All I need to see is a break of a 5-minute short-term high. We have that right there. And I trade, the first 1 minute fair value gap available. So or inverse fair value gap. When I say fair value gap, I also mean inverse fair value gap. So this one is an inverse fair value gap, and when price trades, and like this is a small fair value gap here, but this doesn't count. Like it needs to really be, it needs to really form a nice fair value gap where there's displacement, kind of like the 2022 model. Like I need to see displacement. Should probably mention that. But there's inverse fair value gap right here. So if this is a buy, I just need to make sure that my stop loss is up to 20 points, as close as I can to the low. and it needs to be in a good area. Like obviously, if my stop were to be here, this wouldn't be a good trade. It needs to be underneath the fair value gap, as close as I can to the low. I'd be comfortable leaving it there, and then aim for the first breakaway gap, a short-term high, and then after 15 minutes, I put a break-even stop. Yeah, I have back tested without higher time frame analysis, and basically, I just kind of realized that if I'm going for something that's mechanical, obviously a bias is not like I wasn't sure if I wanted to make it completely mechanical or leave some discretion. But I just kind of like realized that I don't know how to really explain this, but to really give myself the best shot at gathering the data for this model and to be able to just give it to a child so he can do it, I need to remove all the discretion. And I think that it's a lot easier mentally to trade something that has no discretion. That's very simply black and white. Are you following the rules or are you not? Not are you right about price, what price is doing? Are you right about where price is going? So that's just what I'm focusing on. Is I don't want to do something that leaves room for interpretation. What made me turn away from my old model is just simply that in 2024 I started to let go of some rules. So if I bring up my 2024 trading plan, and I was reading some of my old journals, and I saw how like there were times at the beginning of the year where I could see price going higher, and right here, no, I could see that price was going higher, and I think like here was a good example. If I'm trading in the afternoon, I can see that price is going to go to this buy side liquidity, but because price is above the midnight open, I'm not going to try and chase it. Right? Even though I can see that it's going to go up there, I'm not going to trade it. I'm just not going to look at it or whatever. And I would still try and trade it, which was disappointed. That happened at the end of the year. I started to let go of the not the beginning of the year, but I was respecting the rules. But at the end of the year, I would still try and trade it. I stopped caring about what the midnight open is. I even stopped drawing it on my chart. So you see, trading plan in 2024, I had all these inefficiencies and market profiles, macros, times, different draw, different PD arrays. And you can see it from my chart. Like I obviously have lots of drawings and stuff, but going forward, like the way I want to trade, okay, is I'm gonna have like a layout where okay, it's gonna have lots of stuff, okay, but I'm also going to, I'm gonna have one where probably notes is where I'm gonna do all, or I'll keep using the 2024 one. I'll rename it to my main. I don't know, I have to organize all my layouts. But I'll have one basically where I'm trading. Let's just use the notes one because that's the one I've been using to back test. We can use it. I'll open a new tab. This one is 2024. Actually, let's just remove that one. So, yeah, this is just going to be like an empty chart where this chart is just very simply, okay, what do I need? Okay, midnight open. All right, the higher time frame, maybe some higher time frame PD arrays. And it's just going to be very, very simply like the sessions and the candles. And I'm not going to leave much room for any other PD arrays. And then this one is at the end of the day, I'm going to do like a little market review in my own journal. And then I'm going to just kind of like consider everything, if I have the time. But I want to try and make it as simple as possible, where I dumb things down to the point where I can take my model and I can give it to a child and they're going to be able to look at the rules and just follow them step by step. Like pick up the bucket, put it to the left, put the water in the well, and clean the bucket type of thing. It's a very simple instructions. There's no room for any interpretation. Because when there's room for interpretation, then there's also room for doubt. That comes in, and you have to basically manage your doubt and all these things. And I don't want to do that. So, anyways, let's keep going. Where was I? Yeah, no, I went to, oh, so I just said the examples. So yeah, there are a couple of shitty examples I could show where like this one, this one is a 15-minute chart. This is taken on the replay, but we've hit buy side liquidity. Seems like 9:30 open made it run higher to hit buy side liquidity. We're above minute open, which means automatically I'm just looking for shorts. I don't care what else price is doing, where buy side liquidity is. I'm just really looking for shorts. I wait for a 5-minute short-term high, right there, 5-minute short-term high, and then inverse value gap. I go for the first short-term low on the 1-minute chart, and the reason I'm not targeting any of these lows is because it's not 1.5 hour. So my model needs to be at least 1.5 hour, and it's reasonable to see that this is probably going to come down here. This is probably a gap on the higher time frame. Okay, well, you said what I'm kind of working with is a mechanical entry, but it's a discretionary bias or draw on liquidity, like having a deal buy side always mean the mechanics of the entry have to be below MLP. I could do this now. Maybe it's more interesting, but I want to do this presentation on following the rules, and maybe if you like read everything, I took notes from Randy Howell. You check him out. But when I listen to Randy Howell and he talks about like the human brain and the effects of managing money and trading, and this guy was a therapist. He's not even a trader. This guy I've been watching, he's just a therapist, and he started to see that traders were in need of therapy, and so he just kind of like does therapy for them and talks about effects of trading and stuff. But my point is that through watching this, I realized that like because you have no control of the outcome in trading, it's almost stupid to try and have any discretion, to try and figure out anything. Yeah, sure. I can share it with you actually. I can also, if you want, instead of backtesting, because I was gonna make a video on this and share it with my personal experiences. I'm trying to zoom out and just kind of like talk more in depth about it. How do I reset? Let me just refresh. I don't know why it's not giving me the menu. Oh, there you go. What? Why did? Okay. Let me get. I will just send you the link right now. There's one thing I need to delete though. Oh, wait a minute. Okay. So just trying to move things around. All right. I'll just send you a link now. And back to what I was saying. I just I sent you the link in Discord so that you can just click on it and then it'll add you to the presentation. Or I don't know if it'll add you as a viewer, but it will just let you view it. But yeah, through watching this guy, there's like 2 videos I linked, and through taking notes about it, and talking about it, ChatGPT, like I realized that just there's no room for interpretation. A lot of what ST says is, "Oh, figure out a bias." He even says things like, there's some things I now disagree a lot with him about, and I stopped kind of watching ICT and started focusing more on my own trading. And I guess it's kind of helped me see that, and really, why would you want to try and figure out what price is doing and try and have a really high win rate when all you're really trying to do is just make money? You're making it harder for yourself by trying to figure out, how can I win the most amount of trades, when you could just dumb it down, follow a simple set of instructions. You wake up at a certain time, you do certain things, you look for certain rules. And it becomes so much easier to qualify, was this a good trade or not? See, before, I'd go on my Notion, right? And I'd have my trades or whatever, and then I'd talk about the trade that I took, and I'd say, okay, was this a good trade or was it not a good trade? Now it's just so much simpler. It's like, let's go to November, for example, in my journal. And let's just take this one, for example. Like, I talk about this trade here, and I don't know what happened here, but I have to talk about exactly why this is wrong. Like, no, like, there's no, why would I spend this much time talking about, like, I just realized I spent this much time typing out a trade. This is stupid. When I could just have a very simple 1 plus 1 equals 2 and be like, okay, well, like, this is obviously very simple. Did I follow it? Did I not? And it's just that easy. I don't have to talk about what I could have done better. It's just, I guess the only thing to really say is I missed the trade. I wasn't paying attention. And then and at the end of the 20 trades, once I have data and I have 20 or 30 trades, I interpret it, and I look back at the trades, and I'd be like, okay, well, what can I do to change it to extract more money? Maybe could I go for bigger profit targets? Could I, instead of doing 1.5 RR, can I do 1 RR? How would it work? Let's go back and look at the trades and all the days and look at, okay, what would have happened if I had just 1 R instead of 1.5 R? Would it make more money? Would there be more trades? That sort of things. That's the things I need to focus on, instead of having this discretionary bias where I'm trying to, okay, where's price going? Or I'm going to try and trade to line up with that. I need to see a sweep sell side. I need to see a 5-minute short-term low and liquidity cleared. Like, it's just not, it's just a lot easier to build doubts and fears that way. So yeah, and I back tested January, February, March, April, May. I'm not really going to go forward until a bit later in the year, because obviously I'm going to back test June and July. But after July, obviously with the after early August, it's like ahead of the elections, and it's really bad. It's some of the worst months I've ever seen in my entire. Well, I've only been trading for a bit over 2 years, so I can't really say it's the worst I've ever seen, but it was so far the worst I've ever seen, and I've heard other people say the same thing. No, I don't backtest on FX Replay. I just backtest on TradingView. I think that, like, it's just not. I don't know. I can't justify paying to backtest on FX Replay. I know that you can see the candles before they close. Like, that's the one thing I like, is if we're in the 9:30 hour here, 9:15, and I go on the hourly chart, it's gonna show me the close of the 9 o'clock hour. It's not gonna show me where the 9 o'clock, or how the 9 o'clock hour candle looked like at the time of 9:15. And you can also have access to a nice little journal. But no, like, I just looked at the charts really and looked at my journals. And so the way it is, I have it on one screen on my left monitor. I have opened up, and I go over back to the other monitor. How many trades I average a month? Okay, well, through my back testing, let's actually look at that. I didn't actually look at how much over the year I averaged. Let's do. Okay, so this is January. Now, a lot of these, January 2024, I'm not sure exactly what all these were. A lot of these were paper trades, stuff that I put in to kind of journal to record. But at the beginning of the year, I was doing a lot of questionable trades. This is like a 1-minute chart. This is really just all algorithmic. See, like, I'm literally like selling and reversing it, and then trying to just do random stuff. Like, this isn't really any model. So let's go to where we trying to start. I kind of started to see real trades come up around February. So this is backtest 24 is my backtesting me and my model. I see it's about 2 trades a week. Sometimes there's just 1, depending on the economic calendar. Sometimes there's 3. See, most of the time it's 1 or 2. But I was being very selective, and I wasn't looking at the losses. But I wasn't journaling the losses. Sorry, I was just journaling the wins and showing how many times it won. And then I had a win rate in mind. I want to have at least a 40%, 50% win rate. Yeah, 50% win rate. And I accumulate the profit and then I cut it by half and I say, okay, is this enough profit to reach my monthly goal? And it has been every time. But when I was trading on Top Step in March is really when I started to. This is when I got funded. I don't. This is the Express accounts. This is with a funded account. I was taking 1, 2 here. Here I was saying 1, 2, 3, 4. So 4 trades. So it's 6. 1, 2, 3, 4, 10. So there's 10 trades in this month. And I took some to get funded too at the beginning of the week. But yeah, about 3 to 4 trades a week is what I'm pretty sure I was doing. Again, I stopped logging them when I lost the account, and then I did the Apex account where this is an evaluation and I recorded all the trades. It's a playlist on my YouTube. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then 10. So I mean, there's not really many trades, and I got funded. So after the Top Step account, after the payout, I really started to be very selective, and I was taking like maybe 1. This was really tough, actually. I don't think I can't believe I actually. I don't know what this is. Oh, okay. Yeah, this was. It says I lost $300, but then this one says I lost. Oh, it's 2 different accounts. Okay, probably took the same trade on 2 different accounts. Yeah. So I mean, this is really tough. Damn. And then I made part of it back. I remember this is when I was trying to get back out of drawdown, on funded accounts. Yeah. I know I had. You see, I had reduced my leverage, and I was playing with a lot less money, and I had actually done pretty well. I had gotten out of drawdown. You see, it's about 3 to 4 trades. No, well, with the month of July and June, it's a lot less. But this is why I also want to backtest July and June because I had trouble in these months. I had gotten in a lot of drawdown, so I want to backtest these months. And there was a lot of volatility in July and August. Lots of things that happened leading into September where it died down. I stopped using this and I started to journal my trades in my actual journals. So I don't know past this how many trades I was taking, but yeah, I would say throughout 2024, 3 to 4, and then with my current model, it's about 1 or 2 trades a week. And this is because if we open up 9:30 and it expands above the midnight open and it makes a large range, I just don't trade. So anyways, let's backtest June and see how I do with that model. So June didn't really have too many trades. We'll go here. We're on June right now, so I have to switch over to the next contract month. But all right. So first things first, 15-minute chart. Could you send me the document of the trading plan? I want to use that as a template to build my own plan. I just realized I don't have one for technical. Yeah, let me do that right now because I will forget. Did you end up? Actually, you could text me this on Discord, but the situation with your friend. Anyways. Let me just play through the Asia session. There. Oh, oops, too far. So that doesn't matter, but all right. So 9 30. We have minute open. Which is right here. Are we above minute open yet? So I'm only looking for sells. There's sell side liquidity here. So I would look for sells until to deliver to this area at most. And I just need a 5-minute short-term high after 9:30. Now it can either be 8:30 that does this with a news release, or 9:30. And it's kind of hard to justify 8:30 making the sweep, just because we've had a lot of displacement after 8:30. 8:30 did sort of go down first, so I wouldn't really be too excited about shorting. If, however, we retrace and we break above a 5-minute short-term high, I would be willing. But see, this is the thing: is do I just make it so that, okay? Because manipulation, there is a bit of discretion in that. What does manipulation mean? Like, no, like I could just do, okay, are we above minute open? All right, first 5-minute short-term high after 9:30, or if 8:30 does a news release and it's clear manipulation, like consecutive candles, then 9:30 could be in a position to distribute. In this case, 9:30 did make a run higher. It's just it didn't really. I guess there is a 5-minute short-term high here, and it does do a Judas swing until 9:45. So yeah, this would be my model, and then I would go down to the 1-minute chart, and then as soon as we've crossed above this high and it's 9:30 open, first 1-minute fair value gap with displacement lower, I take it. Inverse fair value gap right there. So the thing here is I probably wouldn't get an entry unless I buy the close, and then I'd have to see where's the stop loss. Okay, so I would be comfortable doing that. I wouldn't mind doing this because stop loss is wide enough. But if the stop loss was like here, I would demand the inverse fair value gap to be more comfortable with that. But this is okay. And then first 5-minute short-term low right there. And that's 1.49 RR. So I can move it down a little bit just so I can be 1.5. It can go for the next short-term low. It's not that big of a deal. There you go. This wouldn't be bad. And with a 1.5 RR, that means I need to win 75% of the time to be break even. Yeah, I can see ruling out manipulation does take discretion. Yeah, because I mean, if you say manipulation, okay, what is manipulation? Like, no, it's just very simply, where are we above or below minute open? Okay, and then 5-minute short-term high after 9:30. Like it doesn't have to hit it after 9:30, but it can be. I can take the trade after 9:30. So, yeah. And I'm just going to journal this. I'm going to take a 5-minute short-term high. I'm not going to waste too much time getting all the time frames. I'm just going to get the 1-minute chart with all the PD arrays that are important and the times that are important. So boom. Yeah. I just want this to be visible on the screenshot. And I'm going to put the screenshots in my document. Nope, it's not showing. Won't show the RR. There you go. All right, let's keep going forward. Now we could maybe look for a second trade for 11:30, but see, that's not really. We've taken sell side liquidity. I feel like I don't know. Also, I need to check 9:30 did not make. Yeah, it didn't make a over 100-point distribution. This is a large trend though, so I don't know if there would be space for a second trade, but there is no room anyway. There is a 5-minute short-term low beneath minute open, but it doesn't leave any displacement. Doesn't look like it, so. No, it's past 11:30 anyways. But yeah, like obviously the model is to capture the 9:30 move. So if you see 9:30 moves already, you don't continue try and trade. You just stop. All right, let's keep going to the next day. Do you use quarterly theory with this to help relative manipulation distribution? Looks like it's pretty textbook in this example. No, well, the only reason I have quarterly theory on is just so that I can see the sessions a little easier. So, I know that this blue shade area, because the thing is, when I take a screenshot, look back on it, right? Like, I know that 9:45 is Q2. Here, like, I know that this is a lunch session. That's the only reason I have it on. It's just so I can see what sessions are which, so I can look at the times when I'm going back on it. And I'm not trying to rule out manipulation or anything. Again, I'm not. It's very simply right now. I'm trying to dumb it down as much as possible, and throughout time and data, I can try and tweak it and make it better by adding things. But first of all I'm doing is, are we above or below midnight open? If we're below, I need a 5-minute short-term low and displacement higher, or if we're above, I need 5-minute short-term high and then displacement lower. And that's all I'm doing. All right, so 9:30. Okay, where are we now? We're beneath midnight open. Okay, let's see if 3 a.m. I don't know why it's not. Okay. I'm trying to get the ruler out. 3 a.m. I have a rule that I'm considering adding where, yeah, it doesn't make that much of a range. If 3 a.m. is more than 60 points, then I won't trade. And I can see that lunch session here did trade pretty well. So 4 a.m., the average range 4 a.m. is 50 points. And obviously 4 a.m. here is quite a trend. So 4 a.m. right there, that is 75 points. That is obviously indicating that lunch session did have a lot of excitement. Maybe there's less volatility for the morning session, but right now I'm not going to add that as a rule. It's just a consideration. So I'm only looking for buys. I see that 9:30 did go lower against that midnight open. So do we have a 5-minute short-term high? A short-term low, sorry. There's this one right here. 1 minute fair value gap. There's one right there. Now this could lose. There's the inverse fair value gap. So I can either take the 1 minute fair value gap or the 1 minute inverse fair value gap, whichever one. Really depends how the stop looks like. So 20-point stop. I can either do that in the first short term, or I can do this. So in this case, I would be more comfortable doing this, just because that stop is quite close to the low of the fair value gap, and there's a rejection block here. Yeah, or maybe it'd be the best case. I don't know. Waiting for that. Then I could aim for this almost that short-term high. Or I could just aim for the rejection block. But let's just say I did the inverse fair value gap here. This is comfortable enough. My stop is wide enough to kind of weather drawdown. Now I need to look out for the 15-minute mark. So at 55, I cut the trade or break even stop. And I would have cut the trade right here. Wait, right at when the clock turns 55. So to cut right up here. It's basically been a break even. So there you go. And see, the thing is here, even though, like, okay, if let's say I'm trading like I used to trade, we're like, okay, where's price going? What is it doing right now? Then I could understandably be disappointed that I lost this trade if I thought it was going to go higher. But if I have a rule, then it's not my problem. This is my rules' problem. And if I'm going for testing data for 20 days, then there's nothing I can do until 20 days to change the rules. So there's no reason to be disappointed. It's just, okay, I need to change the rules after 20 days. You can use quarterly theory with this help manipulation distribution. Yeah, oh, sorry, you already said that. My bad. So yeah, let me lock that as break even. And then change this here. Okay. This is, let me write down that this is all in the same week. Week 1. So let's just keep going. Okay, here we're statistical rules are followed. Yeah, obviously. But I see that's the thing is that I think I did a good job considering that I was basically a discretionary trader, controlling my emotions. But if now I have statistics and rules, I think that makes it even easier to actually follow the rules because the failure isn't it's not necessarily your fault, it's the rules' fault. And I'm doing this year in order to learn, right? So there's no reason to be scared of failure. There's no reason to be disappointed about failure. You're just trying to get better, and in time, I'll arrive to a model that's statistically comfortable. But I feel like this is good enough. Again, this is very very dumbed down, but we'll see how I react to it. I think on the mentality, like this is a lot easier to trade with. So, anyways, we're above midnight open. Okay, so we need to see a 5-minute short-term high. So right here is a 5-minute short-term high. Now, sometimes there's days where it will just expand, and that's the thing that I'm trying to account for those days. I'm trying to, figure out a rule where, okay, it's Oh, and also, yeah, didn't we say the London session had trended that previous day on Tuesday, and so it had a choppy morning session. Yeah, so let me actually write that down in my notes. That's the thing. I don't know if I want to do if London session trended, do I want to trade the next session? So let me note down that London trended. One London trended. That's like something I'm worried about. All right. Break even. W. Okay. So anyways, here London session not as big as the previous one. Let's look at the 3 a.m. range. 3 a.m. range. 4 a.m. So the range is going from here to here. Yeah, that's good. 4 a.m. I don't know why it's not from here to here. That's good. So London session did not trade too much. I mean, it's sort of the trend, but not really. Then let's also look at the 8 o'clock hour. 8 o'clock hour 45. That's okay. All right. So I mean, it's fine then, I guess. Yeah. 5-minute short-term highs. So let's go down to the 1-minute chart. I can see how this would have lost already. High at that, stop at that high. Oh wow, no, actually, it would have won. Oh, but there would have been news, so I wouldn't have taken this. That's one thing I need to actually look at the economic calendar. What are we on? Week 5th of June. So economic calendar. Monday. Completely forgot about that. PMI 10. We're on Wednesday, so after 10 a.m. All right. That loss was also taken, I think, ahead of news on Tuesday. On Tuesday. Yeah, right? Where was it? It was a long. Yeah, it was taken ahead of news. Okay, so let me go back to Tuesday. Where is that minute open? Why is quarterly theory gone? Well, I need to go to the recap of the week and get some sleep. Good luck practicing. Yeah, good luck. What was I doing? Okay, Tuesday. All right, other than London trending lower, let's look at that midnight open. So we're beneath midnight open, so I'm only looking for buys. So yeah, I forgot about news. After news, first 5 minute short term low after news. This is a 5 minute short term low. First 1 minute fair value gap. Oh, so this could have worked actually. Where is what's up here? So inverse fair value gap or 1 minute fair value gap, there is not really anything. There's that 1 minute inverse fair value gap here, but yeah, there's nothing here I can take. Actually, wait, hold on. It's a whole 10 o'clock hour. Let me just go back. This is a interesting one. See, my mind would be telling me don't trade because we took out high and low, kind of like in the news release, and it's probably gonna chop around and London expanded. So I mean, but let's just say I'm ignoring the fact that London expanded. I'm still trying to trade. Technically, there is reason to be buying here. I could aim for a breakaway gap, but there's nothing I can buy. Like there's no fair value gap. So the first fair value gap that's presented after the stop in a short-term low would be this inverse here, and that's already after we hit the breakaway gap. Therefore, there would be no trade. There would be no trade. So let's remove Tuesday's loss because one forgot to look at news. But let's just note that London. Okay, London trended. It's not wasn't a loss, it was break even. Also forgot news. So I won't count it, but I want to keep it there because London did trend, and I want to just remember that looking back and be like, okay, is it a good idea to trade after the session's trend or not? Or like what do I qualify as session trend? Because again, there's no room for discretion. So I need to have a specific points. That's why in my 2025 model I have I need to add these, and I was gonna do this forward testing, but I could also just do it now. I don't know if I will add it into the first 3 months until I'm done with the first sets of data. But anyways, if we look at where we are, we're at 10 o'clock hour. We wait for the news to come out. So the news comes out. We wait for first 5 minute short-term high above midnight open, and we wait for displacement lower or inverse fair value gap. And obviously we don't get that. At this point up here, I would not be trading. And the reason I wouldn't be trading is because of that 10 o'clock range. It's 120 points. And if we go back here, we see that obviously 10 o'clock, the average is about 120 points. So what does that tell me is that we've already delivered the price action for the morning, for the 10 o'clock hour. And we're far up into a premium. So it could still work, but I think that I would not want to do anything. And yeah, as you can see, it continues to trend. So let me make sure that I'm accounting for that. 2 in the 10 o'clock hour. When to trade, don't trade on o'clock coins. Don't trade clock if trade makes over 100 points of range. There we go. No trades for high impact news. Okay. Yeah, so that's no trading days. So far, we've only found one trade entire week, and it was on Monday when it was PMI. Right, I did take that trade on Monday, right ahead of after the news. Sorry. Wait a minute. No, actually, that trade was taken after the news. Let me go back to Monday. Yeah, 10 o'clock news. 5-minute short-term high. We're above minute open for stay here. Okay, so I would just have to wait until after the news to make my entry. I just have to wait and enter. This fair value cap is reasonable, but would I have the confidence that, I don't think so. Not after we've made this low here, I would not have tried to enter anything else. Okay, I will go to the bathroom. So let me just pause the stream. I just realized my mic might have muted the whole time. My camera was off, but I was literally talking. Alright. So I'm gonna open here short-term loan. This is the new. So 9:30 we need to doing the 9 o'clock hour. Okay, so then right there. Doing 9 o'clock hour. Oh, alright, obviously, more argument. That more argument would probably like figure what's it. That's something I need to figure out after 20 years. Anyways, so maybe I could also just do like a take profit rule. The problem is when price is consolidating, I mean, I hope that then that leaves room for interpretation. I guess you could just yeah, so I guess that's it. Now what I'm doing is I'm add up everything. Okay, 32.5. That is 1, 3, 37, 5. No, no, 13. Yeah, we have them. We can have that. Okay, that one is over there with that. 598. So 1.25. 31.5. 31.5 plus 33.25. 25.5. This one is 75 minus 87.1. Uh, Uh, lost my. Oh no. That's great. Five. Okay. 154 points. Divided by two. Net 154 points in June. That's not really enough. No, it is. It is. What am I saying? Yeah, that's $300. $200. If I am going with one micro, $200 profit, then that is my goal. When would I have reached my goal? Probably. And I'm also looking at the times where there was one trade where there was a win, and London made a 55 hour made a range that's bigger than the average range that 55 hour makes a year, and there were two losses. So adds up break even. So I'm only including the times where I won or lost with all the trending rules applied. And those are breaking even. So I went one break even, one win, two, three, three, zero, one, three, one, zero, three, one, one, four, one, one. Wait, yeah, 411. Oh, wait, I actually added a loss that didn't count. Oops. So let me restart. Let me restart. Calculations. Okay, let me just show. So today, so this one doesn't count. Count. Break even. And this was 19,063, 5, 6, 70. It's two wins. 5 plus 5. And then we have the So far, this didn't count. That didn't count. Good. That's, all right. Yeah, so it is 143, correct? 143. The total profit, no, sorry. Total profit is 286. What I get? 4. So 286. Total profit is $286. Total profit, total, and I would finish with that. It would have been reached on the last day. Or the last day. And the other thing is, yeah, how many wins? So I have 1 win here. Count 2, 1, 3, 1, 4, 1, 5, 1. So just one more time. 2.5. 2.5. 8.5 plus 42.75. Okay. All right, that's nice. I like that. So 5-1 7 trades. That is a 5 divided by 7, 71, right? And not bad. How much are I'm risking $80 a trade. 286 divided by 80. Let's say at most 80. That's a 3.5 hour month. That's actually really good. No, that's gonna be it for today.